Hey everyone, Justin from Orange Umbrella again. I wanted to give you a quick update on the coronavirus business interruption lending. This has been a hot topic for the last couple of days. There's been some big updates from the government regarding this. I recorded a prior video giving a rough overview of the products, which they have changed quite a lot in the last few days. So this is why I wanted to just give you a quick update this morning. Okay, so what we got. Well, I think there's some key points that you need to think about before you go for one of these coronavirus interruption loans, and that is that they differ vastly between different lenders. So it's always worth going and having a look at what the differences are between lenders. Don't necessarily have to go to your own bank. My advice still would be to approach your own bank first before approaching any other lenders. There are over 40 different providers providing this sort of product for you. So go and have a look at who is on the list as well. So I've just got a few notes I want to run through. So let's not forget a couple of things here. That number one, that this is a loan. It's not a grant. That the government, while they are backing 80% of it, there is still 20% which is secured against your company as well. One of the big announcements from the chancellor is that any loans below £250,000 that you won't have to have a personal guarantee in place. This is a big switch. I was talking the other day about how the fact EFG, Enterprise Finance Guarantee loans, have gone in replacement of the coronavirus lending, and it was always part of that process that personal guarantees would have been taken as well. Now, that's been a big change that's come over the last few days. So don't worry about having personal security. That being said, that if you did default on this loan, the normal commercial procedures of collecting bad debts would apply. So the commercial bad debts procedure would still apply, and the government, the bank would be responsible to collect the government's money as well. And of course, the bank have a vested interest in order to secure their money as well. So one of the big problems we've got is that certain clients of ours haven't necessarily got kind of key knowledge in terms of producing business plans or financial forecasts, which is something unknown to them. A lot of small businesses, we've helped them in the past in terms of actually implementing financial procedures. So we've put in the likes of Xero, for example, for looking after the bookkeeping records, allowing them to produce regular management accounts. But the bank are asking them, especially for small businesses, for information that they don't exactly know how to produce. So I'm going to give you a few top tips on that as well. So the other kind of key point to take away from this is that you should be able to borrow up to 25% of your 2019 turnover or twice the annual wage bill of the company. That's the general rule of thumb about how much you can borrow from the coronavirus loan fund. So, okay. Couple of top tips in terms of when you go to apply and what type of information you're going to need as well. The first thing I would suggest is that if you have your personal banking and your business banking with your bank, is make sure any information that you're presenting to them matches up. So if you're talking about your drawings out of the company, obviously make sure that marries up between your personal bank account and your company bank account, and that there's no discrepancies there as well. The bank are going to want to have a brief update on the business position of where you actually stand at the moment and what would have happened if coronavirus hadn't hit us all so hard. So they'll also want to see things like the management accounts from the 2019 tax year, and if you do have them available, is that the full statutory accounts for the company as well. Now, I know I've just mentioned companies there. You don't have to be a company. Sole traders and partnerships can get access to this funding as well. Okay. You'll have to provide a clear explanation of how coronavirus has affected your business. You will have to explain how you have mitigated some of the risk within that already. What do they mean exactly by that? Well, have you furloughed staff? Have you asked for tax breaks? Have you deferred your VAT payment? Have you entered into additional deals with suppliers? They're the kind of key things that they're looking for you in terms of mitigation. A set of financial forecasts. This is the bit that a lot of small businesses are struggling with. How do we produce a set of financial forecasts? Well, actually, there's a couple of really great apps that you can use. The first one that I would recommend if you've got a bit of financial acumen and you're very familiar with management accounts, or you might have an in-house bookkeeper in your organization, is look at Fruitrilly. Fruitrilly will do all sorts of things, allow you to create business models. It will create a set of KPIs, key performance indicators based on ratio analysis, and it'll allow you to produce a cash flow forecast as well. Now, Fruitrilly is a bit more of a full-on type tool to do this job, and it's a really quite advanced tool that we use at Orange Umbrella for some of our bigger small businesses. For the smaller small businesses, I'd recommend using a little application that again integrates with Xero called Float. Float's a lot easier to use. It will look at your Xero data, extrapolate that into an example cash flow, and obviously we know business is going to be down at the moment, so we can put forecasts in terms of what we think the income will be. Forecasting income can be very, very difficult. If we work in a food business and all traders stopped, actually it's fairly easy to do because we can just put a 0 in that box. If you use my example within my business, a lot of our tax return, VAT returns, payroll, those kind of services are continuing, but where we're seeing a big drop is our regular bookkeeping work. My wife, Sue, who I run the business with, she goes out and does external bookkeeping for clients. Obviously, the number of transactions is obviously declining, so we're expecting a drop in turnover there. Try and apply some sort of calculation and explain that to the bank. So if you create a few sides of A4 just explaining the situation, and try and break that up into an easily readable and well structured format as well. So the bank will want you to model up for about 6 months what you think will happen to the business, and hopefully after 6 months we should start to see a recovery based on what's happened in other countries as well. I wouldn't expect trade to get back to normal. Now, at the same hand, if restrictions were eased, certain businesses are going to see a huge increase in trade, people catching up on things that they haven't done. In particular, I would imagine hairdressers in particular. As you can see, my hair is getting a bit long at the moment. So one of the first things we'll probably do when we get our lockdown is I'll be going for a haircut. So those sorts of businesses will see a really big uptake and potentially be at full capacity. They may even be looking to take on temporary members of staff. Try and build that kind of information into your model as well. So also, the government don't want banks supporting businesses that weren't viable before the COVID-19 crisis has begun. So you need to really paint a good picture of why your business was viable. The bank will understand by looking at your bank statements that you did have ongoing trade. Those management accounts should be painting that picture as well. Just look at my notes for a second. So yes, the next piece of advice I would sort of give to you is you don't need to necessarily have been declined for finance on other products in order to now apply for the business interruption loans. That was one of the bugbears a lot of businesses were finding, is that the bank were declining them at a business interruption loan because they could get a normal loan with them and a normal overdraft. Obviously, these are extenuating circumstances, so the government have said, well, hang on, if it's being, the interruption to the business is being caused by coronavirus, then therefore the business should be able to just bypass that step and apply directly for a COVID-19 business interruption loan. So they're my top tips. I think the key information that I'm giving you today and the key tips that I'm giving you today are about good quality accountancy procedures within your business. Having some form of cloud-based accountancy software. We're a Xero partner, so that's a really great product to be using. We use technologies like Receipt Bank in order to scan purchase invoices in there as well. Bolting on some additional apps as well, such as Float or Fruitrilli, in order to help you produce cash forecasts. Things like Xero will allow you to produce management accounts very, very quickly and very easily. And then in terms of the forecasting, what you can do from Xero is download Excel outputs of those management accounts and then just change the date range and input obviously different numbers manually, or you can use one of the bolt-on applications. A lot of these bolt-on applications, they do come with a free trial, so it's worth having an explore to see whether you could actually get everything done within the free trial. And I would always just go and speak to your bank. Don't necessarily go with the intention of applying straight away, but going and actually talking to them about what the rules are, what are they looking for, and just discussing it on kind of fairly open terms as well, so you understand the rules of the game and what they're looking for before you're actually going and applying. Finally, most banks, when they produce a new product, they would trial this over months and months. They would pick certain branches, they would trial it with their customers, and they'd see how it go. They would tweak the procedures. What the banks are having a problem with is that they've had to implement this in a matter of days. Obviously, it's rare that I'm very defensive about the banks, I must say, but in my last video I was slightly defensive, saying, you know, I could understand why the banks were taking personal guarantees, because they'd effectively taken what was the EFG system and then adapted it to be the coronavirus interruption loans. They were taking a known formula and a set of procedures that they dealt with before. You can kind of see why that's the case, and obviously now they're having to change the procedures again. If you can, I would just let information disseminate into the system and give the banks a chance to catch up. That's if your cash flow will allow you to do so. Now, there's nothing wrong with you approaching the bank saying, I'm thinking about one of these COVID-19 loans. What can you tell me about the process? What type of information am I going to need? Then go and work with some professional advisors like us at Orange Umbrella. We can help you produce management accounts. We can help you produce forecasting information. And then you can go back to the bank with all that information and very, very quickly supply it to them. So there's not so much backwards and forwards in terms of communication. The banks are struggling with the level of communication, so make that process as streamlined as possible when you're working with them. Okay, I hope that's helped everyone today. If you do have any questions or queries, just leave them in the comments box. I'll have this on Facebook and on our YouTube channel as well. So thanks for listening. I'll see you next time. Bye.